Okay, here's the boring bit. Anything you hear or see in this video is not investment advice. It could be absolute rubbish. Please do your own research. Hi there, I'm Justin Waite. I'm going to be looking at three things today, okay? A new stock I bought some shares in last week. I think you should add it to your watch list. It ticks all my boxes of my strategy. Also, looking at news on Bidstack, of course, the interims out at the start of the week there. And I'll be looking at some economic indicators I think you should know about. All right. First and foremost, if you like this video, please hit the subscribe button and the notification bell. If you want to be notified whenever I release a video, I've got a couple of ideas for videos coming up, and so please don't miss that because you may want to take part. All right. And also, any questions, please put them below in the comments. And also below, if you see below show more, you'll see lots of other videos and links there in the information section below. Let's start with this new stock I've been talking about. Just a reminder, here is my strategy, okay? I like tech stocks, and I'll link to a video, actually. You'll see a video by the eye there. You can see that. You can see my strategy there, a video on my strategy. But this is how I basically get through or whittle down stocks to start there. Is it a tech stock? Yes. Is it below 20 million market cap? Yes. Do they forecast profitability? Yes. Is it scalable USP quite easily? Yes. Is it a hot, hyped big market? Yes. Do the board of directors have skin in the game? Yes, it's on my watch list. And so that's why I added this company to my watch list. Okay, this company is Crimson Tide. 2.65 pence, up on Friday, 3.9%, 12 million market cap. And the reason why I like this company, it's been around for a while, but I had a chat with Barry. Their results came out and they announced a significant contract. Of course, I'll cover that in a bit. But they're going towards a more software as a service model, okay? They did have a sort of hardware side too, but they moved away from that. And Barry said to me, we decided to take a risk. We decided to increase our sales team because they're quite prudent, the company, low cash burn. And he said, we decided to go for it. And he said, you know what, I'm coming to the age now where I have to go for it. And Barry said, because he owns a big chunk of stock in the game, and it's starting to pay off. He said, we've been with these clients for a long time, some of the clients we have, big names, but they're starting to increase our exposure to us, and they like our stuff, our app, and it's not just an app, it's a platform, but I get into that. But what do they do? So this is what they do, okay? Crimson Tide are a developer of M Pro 5. It's an enterprise-class mobile solution, a business solution, available on iOS, Android, and Windows Phone 8. Not just an app. They like to say that. It's a mobility platform. So M-Power sends the right person to the right place at the right time with the right tools to get the job done. And if you look there, 260,000 sites trust M Pro 5 worldwide, 6.7 million jobs completed in the last 18 months. 120 million workflows completed per year. All right, so it cuts basically cost, time, efficiency for big operators. They know that they've got teams of workforces. They know exactly what they're doing, where they are, how long it takes to do them. Cuts down on all sort of paperwork. They've got some big clients. These are some of the clients there: Northern by Arriva, Trains, Chiltern Railways, Tesco, Morrison's, Evening Standard, Compass Group. These are FTSE 100 companies, some of these, So Compass and Tesco and Morrison's. So as an example, how they work with Tesco. M Pro 5 helps keep Tesco safe and clean and replaces their paper-based manual data capture. Housekeepers record their jobs using the M Pro 5 app. They download their schedules for the day, scan in to different locations throughout the store using tags. It's very clever. You see, you're not just going on what a cleaner says. You have to scan in here and record, in digital form. Users also capture incidents for defense against false slips and trip claims. M Pro 5 has greatly decreased time and effort taken for recording cleans, as well as the frequency of insurance payments. All the while, Tesco now have visibility of the cleaning operations across their estate using custom dashboards. So you can see big companies here saving time and effort, and also false claims. It's saving time and money. That's perfect. So let's have a look at their results. So 6 months ended the 30th of June. Now, it's quite, at the moment, the revenue is quite low. Of a low base, 12 million market cap. So profit before tax increased by over 2,000% to 101,000. So they are profitable. Okay, turnover increased by 5.5% to 1.2 million, influenced by fewer, lower margin hardware sales. So they're getting rid of the hardware, they're aiming towards software. A pipeline of business enlarged and includes more enterprise organizations. This is what I like as well. Internet of Things pilots in transportation and retail. Okay. Now, this is Barry Whip. He said in the interims, to increase profitability, having added high-caliber sales professionals to our team with associated costs is very pleasing. Our team has increased our pipeline of business and is only due to the longer sales cycle with larger clients that our performance was not even better. So importantly, these sales have not been lost. We have had to be patient as we discuss long-term deals with our clients, which can be 5-year investments, which take time to conclude. The fact that MPro 5 can achieve so much for clients sometimes means that we have to present to multiple departments and decision makers can conclude deals. So it takes a while to get these deals off the ground because these big corporations don't move very fast. But once they get them going, they normally become a loyal, long-term client. We are excited by our early moves into the transportation sector, which affords us the opportunity to show not only MPro's capability to wider audience, but also to showcase our Internet of Things investments, which involve sensors in a wide range of business cases. Internet of Things gives us the ability to track movement, weight, and levels, as well as sensing temperature, humidity, and carbon dioxide levels. The possibilities for MPro 5 with IoT are limitless. I like that. Now, if you go to YouTube, okay, then Crimson Tide there, MPro 5, have a channel there. There's lots of good videos worth watching to show how, the Internet of Things provide. They obviously send these to clients and stuff, it's instructional videos, but it's very clever, worth going to see their YouTube channel. So Barry continues here on the interims. He said, these are early days in our sales growth strategy. And the addition of new software as a service contracts should now be well placed to allow us to grow further. There are so many opportunities for MPro 5, it is difficult to expand upon all of them. That is encouraging. We continue to do things in our own way, pragmatic yet ambitious, and the board is confident that we are well placed to add quality, high margin revenue to our base. Again, very encouraging. We have doubled our turnover since 2015 and increased our staff from 14 to 32. This team is now set to add our long-term contracted base revenues and deliver enhanced results. So, a good bit of news came out just after the interims here. Significant long-term contract with leading supermarket. Now, let's be honest. There's only one leading supermarket. There's many that are sort of catching up. Well, in fact, if you look at it, it's not actually. Tesco are by far and away the biggest supermarket. I think they have, 26, 27, 28% market share. The next one down is half that size. So they are, and obviously, we've probably seen them with Tesco, but they didn't reveal Tesco's name in this RNS. But Crimson Tide has entered into a significant contract with one of the country's leading retailers. The contract revenue is for a minimum, this is a minimum, okay, of 1.4 million over 36 months. The MPro platform will now be used in nearly 4,000 retail locations across the UK and Ireland alone, with international expansion potential. As previous, a smaller contract with a client containing hardware reaches term and is now concluded on a software as a service basis only. What's quite nice here, right, is the MPro 5 solution has been successfully used over the last 3 years for the purposes of store cleanliness and safety within 400 stores in the UK. Due to the configurable nature of the MPro 5 platform, with clients has been able to replace a number of internal systems from competitors and consolidate their requirements for store cleaning, security, catering, distribution, food safety, and safe and legal compliance into the single MPro 5 offering. An early trial of MPro 5 with IoT sensors is currently underway with this client and could add significantly to the revenues with achievable with the client in the future. So what's encouraging here is this massive retailer, the biggest supermarket retailer in the UK, has gone with MPro 5, swept away all the competitors. They used to use many different systems. They've got rid of all the systems, and now they've gone with Crimson Tide's MPro 5. That says a lot. And when you can do that with the biggest supermarket, retailer in the UK that has international presence, it really validates their tech, and they can just go to other supermarkets. They are, if you see on the previous slide, they are working with Morrison's as well. But I also like the IoT. Check out the YouTube channel. There's a little video there about their IoT solutions. It's very clever. But they said that trial is going on, and it's could add significantly to revenues. Now, I've spoken to Barry, and I know he's very understated. He doesn't exaggerate. He doesn't ramp, And for him to say or add this could add significantly to revenues, I think this test is going very well. I don't think they would have put that in there unless the test is going very well indeed. That's what I'm surmising. Okay, Barry Waite, by the way, is chairman of Barry Whip is also the chairman of Way Education. Non-executive chairman there, but he's executive chairman here, so you're hands-on here, more an overseeing role at Way. And I like what he's done there, and I like what he's doing here. So let's scroll down. He comments on this, saying, our team has worked tirelessly over the contract term to demonstrate the unique nature of the M-Pro 5 platform. Having gained visibility at C-level with this retailer, we are excited by the international potential for the client in future years. This contract is indicative of our enterprise-class pipeline that we've invested in strategically, and I'm pleased that our unrivaled platform capability has given this client a significant return on investment with M-Pro. At the moment, it's quite highly valued, but I think we're at a level here, and we say this a lot, a transformational period for a company, but genuinely, this seems like a transformational period. They're expanding with the biggest retailer in the UK, international potential, and IoT potential. Okay, so that's very encouraging. So, just looking at the director shareholders, Barry Whip, executive chairman, owns 22.45%. That's what I like to see. That's this guy's business. He is not an overpaid manager, a CEO overpaid just to manage. He owns the biggest chunk of stock here. Stephen Goodwin is also director, non-exec, has nearly 7%. Non-exec director Graham Ashley is 4%. CEO is just under 1%, half of 1%, and Robert Todd has a 1.8%. So, along the board, I've skinned the game. I like that a lot, and I do like, like I said, at the moment, put on your watch list. It's not investment advice. And by the way, the shareholder register is quite well stacked. In fact, let's have a quick look at that here. There we go. So, just to reiterate, fits my strategy. Under 20 million market cap. Okay, it's in tech. It's in a hot space IoT. It's scalable, very scalable, because software is as a service. Board of directors have skin in the game. It's in a hot sector IoT, and they've got big contracts with big clients. So it's very exciting, and I see it's doing very well, hopefully. Okay, let's go to Bidstack. So they had their interim results. It went down on the day, and I said this, didn't I? I didn't say I said it, but I did say it'll dip on the day. It did dip. We saw revenues a lot lower than we thought, and then it came back up. So let's just go through, I'm not going to go through the financials, just the operational highlights here, because they've achieved a lot, the guys at Bidstack. First demand-side platform with Avocet Systems in March. Significant technical milestone, enabling a purchase of advertising inventory on a programmatic basis. So they're proving the concept there. Second DSP 161 on board in March as well, expanding the breadth of Bidstack's demand-side platform. Development and testing of new software development kits. The generation of first true programmatic revenue following test periods with advertising clients at the end of the period. Independent study provided proof that the product works in a demonstrable way. Awarded brand seal by Digital Trading Standards Group. Post-period highlights, strategic partnership with Dentsu Aegis Network, massive company, acquired minimized media, bought PubGuard, contracts with Zandir, formerly AppNexus, the Trade Desk, operates two of the world's largest DSPs, agreement with Epic Games to make our SDK available for games using Unreal Games Engine, and renewal of Football Manager. So they've achieved a heck of a lot. That's in the last 6 months, and just beyond that. That's a heck of a lot. The guy, James and the team there, fair play, and you can see they are working. What they're doing there, James just said, he's working in a structured way to achieve an end goal, and they're doing that. Let's go to James. There's a lot to say here. He said a lot more than this. I edited this down. I found it really hard to edit down because James, everything he said was spot on. So I tried to edit it down to one slide. Here it is. As I said in my audited accounts for 2018, we are building out Bidstack to become the biggest media owner in the video games market. Our challenge for 2019 was to prove that advertising agencies and brands that are in-game advertising inventory could be traded programmatically, which we have now done. For the first half of the year, we've not focused on revenue. Instead, we focus on building out our offering to a level where significant advertising revenues can be run through our platform. I believe our patience and methodology have paid off, and our team has captured the imagination of advertisers across the world. The fruits of their labour have become visible with our first strategic partnership agreement with major agency holding group Dentsu Aegis Network. I expect this will now speed up a number of other elements to the business. These developments will open the door to significant real advertising spend. You see, that's what the Dentsu is all about. Now, having won the confidence of one of the world's biggest advertising groups is an enormous breakthrough for the group. The Bidstack team has undertaken an incredible amount of work in 2019 so far, and I couldn't be more excited about where the company is going in Q4. Q4 is all about execution on our previous work. I'll just reiterate, James is doing what he says in the tin, building the company in a very methodical way. You have to tick off certain boxes before you can get the next one, and he's doing this. Like I say, he's got the content, he's got the supply side, he's got the demand side, and now he's got that agency spending. So he's proved it all out, it's working. And so I think it'll be a very exciting Q4 in 2020. Right. I'm going to do something different here. I'm not going to cover my my returns. I normally show here my personal returns for my portfolio and the stocks I've covered recently. Because I want to keep, I'm mindful of how long these videos are. People haven't got much time, so I'm going to try and keep them under 20 minutes. But what I want to do is show you some indicators, some economic indicators. I've been, accused of being a bit of a bit bearish on Twitter, and that I'm doing it for my own gain in some way. No, I'm not doing it. I just think you've got to be aware of where we are in the cycle. Okay, economic cycles run between 5-10 years, pretty much. We're now at the longest bull run ever, or close to, and so and that's why the market at the moment is very hard. Are we at the end of a cycle, or are we just going through choppiness? It's hard to know, but this is where keeping an eye on the economic figures is very useful because it'll tell you what's happening. And so I'm going to show you now what I've done. On a website called investing.com, there's what's called an economic calendar. You can filter on there to follow as many countries as you want, as many different indicators. What I've done is I filtered basically to the most important economic indicators from the top 6 biggest countries in the world. So that's America, Japan, China, Germany, and France and UK. All right. So we've got the biggest economy in Europe, that's Germany, biggest economy in the world, that's USA, biggest economy in Asia, that's China, and then we've got us as well. So, of course, it'll impact us if we're at home. So here we are from the start of September, okay? Now, there's 3 columns here pretty much. In fact, there's more than that, but the ones I want you to look at is the actual, the forecast, and the previous. So let's start with, in September, this is early September, manufacturing in the UK. We don't have a huge manufacturing sector. It's only about 20% of the economy. But look at that. Below 50, okay, is contraction. That means it's getting smaller. That's not a good thing. You can't achieve growth if you're getting smaller. So look, the actual is 47.4, down from the previous of 48. So it's slowing down and it's under that 50 level. Construction, purchasing management index, again, below 50, it's slowing down. And the previous is 45.3, so slowing down again. US ISM manufacturing, okay? This is not good because the US is a big economy. And as you see the previous there, it went from 51, which was expanding, that's growth, to now contracting. It's getting smaller. When things get smaller, you lay off jobs. It's a lag factor, of course, because you'll struggle on for a while. That's why the jobs indicators, people say, well, the jobs are holding up well. Yeah, they will do. Jobs are a lagging indicator. People start laying people off after they struggle for a while. So let's go to GDP services. This is quite worrying because our services sector in the UK accounts for 80% of our economy, 80. Now it went from 51.4 down to 50.6, so nearly 1% smaller, okay, or 1 point smaller. Not in contraction, just above that 50 level, but it dipped nonetheless. US non-farm payroll, jobs basically outside the farm area, went down from 160,000 to 130,000, okay? China, in September the 16th, their industrial production down from 4.8% to 4.4%, sorry. So again, slowing down. Germany manufacturing, Germans are big manufacturers, huge. It's the mainstay. I think it's about 80% of their economy. It dominates their economy because they're amazing, engineers, and they produce some fabulous cars from Volkswagen to Porsches to BMWs to Audis. So look at that, 41, way below that 50 number, way below, and even that one there, 43 previously, it's below it. Contracting again, slowing right down. And then you got US consumer confidence. It dipped from 134 to 125. Why is that worrying? Because America is a consumer-led economy. 70% of the economy is driven by consumers, internally consumer sales, shopping, all that services. So when the consumer gets bearish and they rein in, tighten their belts, or tighten the purse strings, it affects the economy. Last set of data here. Manufacturing in China. So it's contracting. It did go up a little bit from 49.5 to 49.8, but it's still slowing down. ISM manufacturing in October in the US down again from 49 to 47. It really is contracting now. GDP construction. Look at that, 43. That is really contracting down from 45. Non-farm payrolls in the US again this month down to 135 to 157. Again contracting again. And we've got services in the UK. Again, UK services takes 80% of our economy down. Now it's now contracting. Like last month it wasn't contracting. Now it's contracting. 49.5. ISM non-manufacturing PMI down to 52 from 56. That's a huge drop. It's not contracting yet, but it's a huge drop from 56. And then we had the non-farm payrolls out again, slowing down again. Previous was 168. And now it's gone to 136. Why am I highlighting these? I'm just saying, be careful. Carry a bit more cash on your account if you can. I'm investing in a dividend fund. Of course, when stocks go down, dividend payers, the yield goes up. But you've got to try and achieve total return. You don't want to be sort of 50% down on the share price and only achieve, 5% dividend yields. No point. But the IUKD dividend fund, in fact, it's on the eye there. You can see it there. I point that out. Also, I'm holding a bit of gold. But mainly I'm in cash, around over 60% in cash, So just be careful. We're at the point of a market where we could be going lower because all the economic indicators are looking that way. We may have a nice bounce, I don't know. But, for a long time now, people said 2020, and looking at the yield curve inversion points to a recession happening in 2020, the back end. Some people are starting to say that may be happening sooner. And of course, people don't measure in sentiment. Whenever you get a raft of economic details, there's data that shows it's negative and everything's slowing down, people start pulling their investments, stop spending, which accelerates the slowdown. So never underestimate sentiment when people start feeling bearish. Of course, there's also the side that the good time to buy stocks is when everyone's bearish, if you're looking long term. But don't buy overvalued stocks. Look for bargains, okay? Because if you buy overvalued stocks, growth stocks generally slump the most in downturns, because they're highly valued, and they feel they're not going to hit those targets that are quite high. So just be careful out there. Hold a bit of cash. Look at more defensive plays, more cash generative plays, and you should be okay. Listen, a recession is nothing to worry about. Essentially when investing, if you look at the stock market over the last 50 years, it's done very well. If you reinvest dividends, FTSE 100 has done very well, but if you reinvest dividends, but it's done very well. All I'm saying is, take your opportunity here to maybe pick some bargains if you can, because you can get the best returns coming out of a recession. So try and be a bit more patient. Try not to buy so much. Try and sit in a bit more cash, and then take opportunities, because there will be opportunities going forward. Hope that helps. By all means, like I say, hit my face there, hit the notification bell as well to subscribe to this video. If you have any questions, put them in the comments below, and I do appreciate you watching. There'll be another video midweek.